Every parent aspires to have sufficient enough amount of money to fund their children's education. But in this process, the parents tend to do a lot of mistakes. In this episode on NRI Money Clinic today, we are going to discuss what are the common mistakes parents make when they set out to build funds for their children's education. This is NRI Money Clinic for you, and I am Dr. Chandrakant Bhatt, investment consultant and a financial planner.
NRI Money Clinic. No hype, just the right advice.
Dear viewers, to talk about the common mistakes the parents make when they set out to build funds for children's education, I have brought to the studios a very eminent faculty, Mr. Ajit Sathyanandan. Ajit Sathyanandan is a practicing financial planner, a person who has more than 10 years of experience, a person who is, I have no hesitation to say, is a celebrity financial planner. His expertise goes beyond NRI community. He has helped thousands of people from different nationalities in building their financial plans. Welcome to this show, Mr. Ajit Sathyanandan.
Thank you so much, Dr. Bhatt, and it's a pleasure to be out here, and it's really an honor to be in such a popular show of yours. Thank you so much.
My pleasure, Mr. Ajit Sathyanandan. In fact, it's an honor for all of us to get insights from the practical side of financial planning. There is no dearth of YouTube videos or articles or the television shows talking about the child education plans. But on the ground, I am a financial planner myself practicing, and you are a financial planner with so much of an experience. Let's discuss what are the common problems people face or what mistakes the parents make while they try to build education funds for their children's education.
Yes, this is one of the most common and the most important thing in families' financial planning. First and foremost, they have to prioritize on what exactly they want to plan. Okay.
And so it's just not the child education plan. You mean to say that they have to prioritize. What is that they have to prioritize?
See, it is very important for any family. Before they start out with any plans, they should have a very strong or a very good life insurance and a critical illness cover.
Okay.
Yeah, it is very important because these days, and especially after this COVID situation, we know how things are changing around the world. So it is very important to protect their risk and make sure in case God forbid something happens to them, there should be some backup in terms of financial backup.
You mean to say, even though we are talking about a child education plans or funding for this education of children, you feel the priority should be life insurance and then child education?
Exactly,
Okay.
Exactly. That's what I meant to say.
Okay. Is it, when you say prioritize, one aspect you told is the life insurance part of it. The parents have to take care that they have sufficient life insurance. Is there anything else that they have to prioritize?
Yes, the other important thing which they really have to consider is to have a good retirement plan. Okay, it is very important when they are young to plan for the retirement, because a child's education, you have time for that, and there are various avenues and opportunities available for the child even in the future in case they don't have an education plan, but you don't have a second innings when you reach a particular age. So it's very important that you plan for your retirement at an early stage.
Okay. Most parents, when they have the child in the family, get overwhelmed. They will be taken over by the emotions. The child is the darling in the family. They want to save money and put it. But your advice to the parents is, first things first.
Exactly.
It is very essential to prioritize things.
Right.
First, put a protection in place, your life insurance and critical illness covered. If something were to go wrong, this will protect the interests of the child as well as that of the family. Second thing is, take care of yourself. When you become older, you don't have enough money or enough time to build your retirement corpus. But if you start early, you will have literally 25-30 years of time to build the retirement corpus. Once you prioritize these two, then you attempt a child education plan. That's the suggestion you give.
That is exactly the process which we have to follow.
Right. I have always an admirer of you and how you have created such a wonderful, happy families. During the course of practice, I have met many of your clients, and the moment we come to know that it is Ajit Sathyanandan who is handling them, we know that there are no mistakes. Is it the same practice you have done with your clients, or is there something else you do?
No, it is, our objective is to give the best possible solution to the clients, because we have to look at their budget, we have to look at their future goals, we have to look at their age. So we consider all these parameters and we make sure we give them a very honest review about their future financial planning.
Okay, you mean to say that, see, there is a lot of articles available, there are a lot of YouTube videos available. These, when I see these videos, it looks to me like these are textbook kind of a scenarios. But on the ground, things can be quite different, isn't it? This is what I have seen. What has been your experience?
Yes.
Is it the same thing what you see in a textbook, or the ground reality is something
Not
different?
at all, because parents get emotionally involved with their planning, and they might think about, okay, my child I have to make my child an engineer or doctor, but it's not exactly the same. There should be a logical calculation to whatever they are planning in life, and you cannot just keep aside a huge amount for all these things, because you need to plan your finances the right way. So it is not exactly what you see in the books, what you see in the videos, what you read in the books. It is all about the practical experience which we go through when we meet different families, and we share the experience with different families.
Yeah, this has been my experience too. As a planner, I've always felt or experienced is that I can do anything very easily. But if I have to plan for a family's child's education, that is where I feel a lot of constraints. Constraints in the sense, now the parents are very young. They are in the beginning of the career. So there is no saving or there is very less saving. They are in the lower strata of the career. There is a child which is coming now, which is an additional expense. Every parent want to send the child to a Harvard. But whether it happens or not, we do not know.
Exactly.
And so many uncertainties. See, for example, the parent himself does not know where he is going to work. Will he stay in Dubai? Will he stay in another country? Will he go back to India? Will he have a job? So these are the practical problems. And he doesn't know how brilliant the child is.
Right.
He doesn't know which university is going to go and what kind of a interest the child has got. So these are the practical issues, and you have to tell me from your real life examples how parents can prepare for these uncertainties. I will say lack of clarity. What they can do, because nothing is known in case of a child's education. Only thing we know is that the child has to go to college. That's a reality, as well as that is a wish of the parent. How can a parent wade through this? What is the formula that you can think of, or what are the steps you think the parent should follow?
Thank you so much, doctor. So here let us go step by step. The first step is that don't get worried about how much you are going to keep aside for your child's higher education. Don't keep a particular projection of the amount. Okay.
You mean to say $50,000, $100,000?
Yes.
That projection is
because
not
the
required.
child is still small. You do not know what he's going to grow up and become in life. Okay. Let us go step by step. First of all, don't worry about the projection. Don't worry about the amount. The important thing is to start off with a plan. Okay. Important thing is to start off with a plan. It depends on your ability to keep aside some money. Okay, but as I told you before, it's also important to start off with your life cover, critical illness and retirement. And after that, keep aside something, at least make a beginning for your child.
Without worrying whether you'll have enough money or not.
Exactly.
Most parents do this particular mistake. They wait for their saving abilities to increase, postpone it.
Right.
In the whole process, there is one child now.
Right.
And within a few years, there is one more child. What should have been an easier task become doubly difficult task at that point of time. So it makes sense to start small.
Yeah, it's very important to at least have a beginning, and later we can see, because lots of opportunities will gradually come up later in life. But important thing is to start off. This is what I advise most of my clients out here.
See, one problem the parents tell is, okay, if I don't have enough money, how the problem can be solved? What shall I do? what are the things that the parents have if they run short of the cash?
Okay, that's a very good question, doctor. See, as you know, time has changed a lot. Okay, education system has gone through lots of changes. Okay, and when a child reaches a particular age, maybe the child is very brilliant. Okay, the child could get a scholarship on his own, or if not, he can always take up a job. He can complete his education during the course of having a job. So lots of opportunities are available. So don't worry about not having enough money. Don't worry about not keeping aside money. Important thing is to start. Okay, and later things will gradually come into its own place.
See, we Indians have this mindset that we have to do everything for the children. Okay, but Western thinking is not like this. See, children will try to become independent on their own around 16, 17 years of age. They take up some small employment. They come and join the schools later on. All these things will happen. But we Indians have this mindset that I should do everything to the child. My child should not suffer. That's the problem. I also feel if the child is good enough, there are scholarships which are available. And I was participating in one of the television shows earlier where an expert was talking about the funding options for children's education. And I was totally taken aback that there are so many options which are available for funding children's education. The child can take a loan.
Right.
And if he is good enough, he studies well, he takes up a job, he can pay back to the institution. Government also has a lot of schemes around that. So parents, I personally feel, should not be worrying too much about, oh no, I could not save so much of a money and kind of a thing. So this belief in me, you have also echoed on this.
Yes, precisely. You're absolutely right, doctor.
Okay, right. Mr. Ajit, one of the practical problems I have seen is many of these parents get into some plans and they take a commitment of paying for 10 years, 15 years, 20 years in some cases to pay into this plan. What do you think? Is it a right thing for the parents to get into this kind of a long periods of commitment for funding children's education? Are there better ways of doing it?
Well, Doc, it's a very good question, and especially we being in a region where most of our clients are expats. Okay, and see, it's not a wrong thing. It all depends on their ability to pay. But personally, I would always recommend a short-term plan, because we do not know what happens to a person's job, okay, whether he is moving away from this country, okay, and there could be some penalties in the plan, okay. So personally, I would recommend a short-term plan of at least 5 years, okay. But if a person is at a very young age and if he has got the capacity to pay for a longer period of time, it is okay, fine. But this is what I personally recommend to most of my clients.
Yeah, and one more problem that we get into when a parent takes a long period of commitment is, today they have one child.
Yes.
A few years down the line, 2 years, 3 years, 5 years down the line, there could be another child.
Right.
So the commitments could double.
Exactly.
Right?
Right.
So I also feel it makes sense for somebody to go in for a commitment of shorter period of time.
Right.
Get over with that commitment.
Right.
By which time, if there is one more child, you take up the education funding for that particular child. Or if you feel that this amount what you have put in is not sufficient, maybe you join another scheme.
Exactly.
Isn't it? It's a more practical situation than to get into a 10-15 years of commitment and struggling to pay subsequently.
Because this is specifically very important for expats, and we have seen during this last couple of years because of the COVID, how people have lost their jobs.
COVID was one issue, oil prices was another issue, the jobs in banking sector became very redundant. A lot of issues were there.
Exactly. So usually we would always recommend a short-term plan to our clients, and many of our clients are benefited by these type of short-term plans, in which you won't even realize how quickly the time passes by.
Yes. Yeah. And even if they, let's say that they lose the job, and there is some end of service benefit will be there, which they can use and pay it off and get rid of their commitment. So it becomes easier for them to manage than getting into the long-term products, right?
Right. Precisely. And psychologically also the clients are quite happy by going for a short-term plan, and they can commit themselves very easily for a short-term plan.
Okay. Mr. Ajit, when parents start to join a plan or to start saving for child's education, they have multiple choices with them. People can go to bank, people get into an insurance policy, people get into a saving plans, people can use the stock market route, people can use the fixed income route. What is your opinion is the most appropriate thing for a parent to do? Or are the people doing some mistakes there? And from your practical wisdom, what do you recommend to your clients?
Based on my experience and based on my entire portfolio, what happens is that usually most of the parents think about taking a child's education plan when the child is at the age of 7, 8 or 6, and when you see that the time horizon is very short. Okay, and what I believe is that when a child is ready for education, there shouldn't be any ambiguity on how much we are going to get. So it's very important to go for a guaranteed return plan in such a scenario. But of course, there'll be some scenarios where the parents at a very early stage would like to keep aside some money. We can think about a market linked plan, but usually what I've seen is that in the earlier stages, there's lots of expenses for the family. The child is growing, maybe they would like to purchase a property. So usually what we recommend is to go for a guaranteed return plan. Of course, they can always keep their money into a fixed deposit, FCNR deposit. Okay, the various avenues are available, but personally I feel that the parents should know exactly what is the amount the child will be getting when the child reaches a particular age of their higher education. Okay, this is what I would recommend my clients.
Absolutely, I am in 100% in agreement with this. When we did a video earlier on child education plan, some people commented that you are not advising right. But I can tell you from my experience, 2007 and 8, there were a lot of education plans and the stock market collapsed. Especially those guys who have put money in a dollar investment plan, they had invested in the emerging markets like Brazil, South Africa, India, China. Right. One side the stock market collapsed, second side the currency collapsed, and instead of having 100,000 in account, the funds dropped more than 50%, 60%, in some cases up to 80%. That was very, very awkward, and it is not something to be good in that situation.
Right.
Personally, I feel the end result is very important than the means.
Right.
And it's a good idea, even from my practical experience, to go for the guaranteed return plan.
Right.
So thank you very much for acknowledging this point, endorsing these views. Your views as a fellow financial planner really endorses my thinking which is there within me. So Mr. Ajit, this is such a valuable information that you have given, and whatever you spoke was not theoretical knowledge. It is not something who looks at a textbooks and talks. This is the practical wisdom, and these opinions have emerged based on looking at lives of thousands of people over the career which spanned over a decade now. Thank you very much for bringing these points for the benefit of our viewers. I am very sure the audience will take cues from the points that he has said and will take the right steps in building funds for their children's education. Thank you, Mr. Ajit, for bringing all these points for the benefit of our viewers. It's a great pleasure to have you in our shows, and I look forward to come to our program and share your knowledge and your practical wisdom on more aspects of financial planning in months and years ahead. Thank you very much once again.
Thank you so much, Doctor. It was such a pleasure to be invited to your show. Thank you so much once again.
Dear viewers, by this time you would have seen there is a big difference between the theoretical approach to a child's education plan and the practical ways of doing it. If you are a person who have young children at home and want some help to build funds for their education, you can make best use of our services as well. You can send us a WhatsApp message from any corner of the world on the number shown here on the screens, and myself or one of our team members would help you to build a very robust plan which can fund your children's education. Dear viewers, the episode which we have done today, if it gave you insights into what are the problems that you might encounter when you set out to fund your children's education, please like this video. If you are a person who is watching this program for the first time, or if you are yet to subscribe for this channel, please hit the subscribe button and press the bell icon. Don't forget to share this video with your friends and relatives. Thank you very much for watching this episode on NRI Money Clinic. I shall be back with you with yet another topic in yet another video very, very soon.
Press the bell icon for more details and subscribe our channel.